good afternoon. You're watching Closing Trades on ET now, and the closing trades are pretty much okay. It's a bit of a lackluster trading session we have at our hands because the Nifty has been just around that flat line. Yes, intraday there have been some jagged edges, but just around that 800 mark, haven't done much throughout the trading session. It's IT sector which is weighing heavy on the index right now. Of course, that impact coming in from TCS, the lack of visibility on the recovery timeline, plus that revenue decline is something that the street is not liking. So that stock is down 1.6%, and dragging their feet are also HCL Tech and Infosys ahead of their earnings. The expectation was that they'll report better than expected numbers as far as TCS is concerned, but with this disappointment, the street is going a bit more with tempered expectations into those two counters. Real estate stocks have also seen a bit of a consolidation. So after a couple of days of solid gains, today there's a bit of a breather on those names. It's metals which are shining away in the trading session, especially the mining names like MOIL, MMTC, NMDC. These are the names which are up anywhere between 5 to 15%. So a lot of action when it comes to the metal names, and then individual names. TVS Motors, after that damn capital note had come a couple of days, that stock has been on an uptrend. Today it's at all-time high level. Grasim as well, wherein there is a board meet to discuss some fundraising at some point of time. So that stock is higher as well. And then Kalyan Jewellers continues the momentum, a gain of almost 2% coming in there. But I have to say, it's not as exciting. Yes, 19,800 has been held, but not a clear direction.
No clear direction, and today we are actually the only ones, much unlike what the rest of the globe is doing. So while we did recover from those lows on Monday along with the rest of the globe, today we're not really seeing a follow through. If you take a look at the Asian screen, that closed in with pretty handsome gains all across. A solid move, in fact, over a 1% across the piece. Europe as well has started off on a very strong footing, 0.5% gains through and through. It's only our market which is taking a little bit of a breather today, and let's hope it's only a breather. So yes, technology is the one which is at the bottom of the pack, but add to that, there are also names like a Bajaj Finance, SBI, there's Hero MotoCorp as well, which is down about almost 1%. But some of these energy names are the ones which continue their move up. So Coal India, BPCL, Power Grid, they're all the ones which are actually holding out in trade. And of course, some of the two-wheeler names as well are looking strong. But a couple of other names which are in focus, and BPCL, Citi's come out with a note. They're maintaining the buy stance on BPCL with a target price of 445. They're saying that the concerns and fuel price cuts should now ease, and given that crude as well as gasoline and diesel prices have cooled off, they do see some tailwinds emerge for BPCL. There's UBL as well, stock on a gaining spree today. Novama has initiated coverage, target price 1935. They're saying that state-specific issues are only easing out for them. The new MD and CEO is in place, and that's going to put the company into higher trajectory from here onwards. But yes, it's all about IT. Anisha, how's the street absorbing TCS's numbers? What's the verdict from the brokerages?
Well, the brokerages are saying that near-term uncertainty is going to weigh heavy on the multiples of the stock, and there's no fresh trigger for the market or anyone to buy the stock right now. So that's the reason you're not seeing buying emerge even at lower levels. Because as far as the recovery timeline is concerned, it did not sound very committal of the fact whether it will happen in Q4 or the next year, because Q3 is, as it is, seasonally weak quarter, so we aren't expecting much there. The big question is when all those deals that have been signing start coming into the numbers as well, and that's of course the big talking point. We did try and question the management about it as to what their estimate is of the recovery timeline. Listen into what they told us.
Seasonally a weak quarter. As he explained, I think we have some visibility into what we will do. But there are uncertainties in terms of how customers will reprioritize some of this. This quarter is also a year-ending quarter for many of our customers. So they will also try to shore up whatever they have to in their P&L, in their books. So I think Q3 is number of working days is less. So you'll have to take all this into account while calibrating what we will do in Q3. And to that extent, I think, it doesn't look like, Q3 will be a very strong Q3, right? Unlikely, but we'll wait and see on how Q4 turns out.
The current trends, the near-term macros are uncertain, and that's visible across the board. So what we are doing is monitoring the situation on a month-on-month basis, and currently on the month-on-month basis, trends have remained similar. There's normal seasonality which kicks in Q3 and to an extent in Q4. We need to keep that in mind as well.
Okay, even Infi ahead of its numbers today. HCL Technologies, all of them are pretty sour. In fact, Infi is pretty much mirroring what TCS did yesterday in trade ahead of its numbers. Absolutely quiet. In fact, it's dipped a little bit further. One must say about a 0.5% downtick is what you're seeing on the stock price, although this is not the session low on Infi or on HCL Technologies for that matter. But let's take stock of what the market sentiment is looking like. Naresh Kanal on the show with us as always. Kanal, let me begin with you. Afternoon, firstly. Does it seem like we could have hit some sort of hurdle in the near term at 19,800 thereabouts?
Yeah, good afternoon, Asha. So, in my sense, the pace of rally is slowing down, and I think that's a good sign because when you are increasing the base or the support moves up higher, and the pace of rally slows down, which means that the markets are not getting extremely aggressive. But if in the same time you have a lot of news flow getting digested, and especially the likes of TCS, for example, if that gets digested with not too much of a volatility on the indices, I would actually take that as a good sign or a positive sign for the index. And as you're rightly indicating that many of the Asian markets, as well as the global indices are also showing signs of positivity for themselves. So that could be another positive for the markets, that even if you are in the range for the index and with a lot of news flow surrounding, I would still consider that as positive. The Nifty holding above the 50-day moving average, that's another technical strong support level for the index. And now that we've confirmed a breakout above 19,700 mark, that is acting as a strong support or a base for the index over the very near term. So I think all of these factors indicates that the bias still remains bullish on the index.
Okay, point taken. So that's a take at the index level. But let's welcome on board Sandeep Sabharwal as well. Sandeep, you weren't very positive on the IT sector ahead of TCS's earning. Has your thought process changed at all after listening into what the management of TCS had to say?
See, I think there are times when we have to listen to the managements of companies, and there are times we have to sort of use our own brains. So I think this is the time when we are evaluating the technology sector. We have to use our own analysis and see where the entire macro environment is going. So the macroeconomic scenario for the IT industry is not very great. Say there will be some specific IT companies getting to some specific industries which might continue to do well. But the larger diversified IT companies like TCS, Wipro, Infosys, HCL Tech, etc., I think they are facing significant headwinds of growth, and they are not going to go away soon. 2024, in fact, might be an even tougher year than 2023, which most of the analysts are not factoring in at all. They are expecting some sort of recovery to come in, but there is no logic behind it. So I think people need to be cautious about these stocks. They have had a decent run up in anticipation of bottoming of performances. That bottoming of performances, I think, is unlikely, at least for the next 2 quarters.
Next 2 quarters are going to be weak, but the question, of course, is the deal signings that they have done has to come on books at some point of time, and I think that's the reason why the street is penciling in the FY25 number. But the other big disappointment in TCS's number was that headcount decline of 6,333. It's a large cut coming in as far as the headcount is concerned. And to add to that, there were a couple of reports. InfoEdge's Naukri came out with their index report talking about how this quarter there has been a dip of almost 11% in gross hiring, plus the fact that there is no green shoot whatsoever when it comes to the IT hiring. And to add to that, even Accenture, as per reports, has delayed the wage hikes, the promotions as well, and probably not giving any hike in India. So that tells you the extent of weakness perhaps that is there in the sector. In fact, regarding the hiring trends and attrition, we did speak to Team Lee's management as well as to what's their own expectation of the timeline of recovery on IT hiring. Listen into what they had to say.
As of now, we are not seeing any green shoots, be it with IT service companies or product companies, GCCs, back office. Overall, the hiring in IT segment is very weak. And this is something which we have been seeing for the last 4-5 quarters. And the fact that there are some estimates that there can be some recovery early next year is all purely based on some hope statement. But on ground, we are not seeing any sort of early trends. We expect that the attrition numbers might come down because so far, especially last 4 quarters, while we are seeing that there are no new hirings happening, the replacements attrition numbers are still very high. But now those numbers are also coming down. We believe the attrition will go back to the single digit numbers, which it used to be pre-COVID in IT segment, and also in terms of the hikes and salary corrections. So we are expecting that there'll be something in the coming calendar year to happen.
Right. Kunal, let's take stock of what the charts, though, are indicating. Because, in the last few odd months or so, we have been seeing some buying kicking in IT names. They've rebounded nicely as well. But the fundamentals and the way the stocks have been moving, they don't really match. What are you reading, though?
Yeah, they don't match, and I generally look out for the trends in prices, and prices are indicating strength across the IT names. Now, strength does not necessarily mean that these stocks would go into a vertical rally, but it's just that these stocks may be less prone towards a sharp sell-off, and that's what I think we've seen for IT stocks over the last 1 year. And I think September 2022 was the classical month where many of these large cap IT stocks formed a bottom. Even in Jan 2023, when these stocks disappointed, I think, if I'm not wrong, in terms of results, or maybe in the next quarter, these stocks, they did not get into another sell-off or retested September 2022 lows. And now in the last week or so, many of these large cap IT names like TCS, I think, if I'm not wrong, maybe even Infosys, etc., many of these stocks had come back to their 52-week highs. So when these stocks approach into the results on a positive note, and if they are met with some sort of a disappointment, you're bound to see some sort of profit booking or a correction into these names. But the fact that these stocks are significantly off from its previous major swing lows, the larger cap IT names specifically, I believe that the markets have already developed some cushion into these names. So net, my view is positive for these IT stocks, and I would expect that in case of this correction, say, intensifies by another 3% or 5% broadly for likes of TCS or Infosys, that should be taken as a good buying opportunity.
Okay, that's the call coming in on the IT names. NMDC, Nalco, GAIL, IGL, and of course Coal India, that's where you're seeing the bigger moves come in right now. Sandeep, any of these energy plays that look attractive?
No, I'm not buying any of these PSU stocks.
Okay, a complete no-no. The Coal India, Naresh, I guess the prices talk a different story altogether. Can't keep away from the strength. You think there's further headroom to go for Coal India?
So the trend is positive, and this is one of the larger moves the stock has done after a really long time. So from 230 levels, the stock has moved up from September start from 230 all the way to 300, 310 zone. So out here, the case is the momentum is still strong, but it's getting into overbought zone in the short term. So one should actually be looking out for some bit of a pause here, but the trend is still positive. I would expect it to hold above the 290 mark. So trend positive, but at current levels, risk reward is not great. We could get into a pause, not necessarily a correction in a sharper way, some bit of a time-wise pause. But overall, the whole mining space looks interesting, whether it is Coal India or a NMDC, or even the broader names like a MOIL, etc.
So the entire mining space looks quite attractive. A lot of names which are actually doing cartwheels today. Look at MMTC, that's up around 20%. NMDC is higher by 6% as we flagged out. But what's the reason of the same? Let's go across to Asesha to find that out, because there seems to be a bit of fillip coming in for the mining sector. Asesha, explain to us the development.
Well, yes, mining companies the likes of GMDC, NMDC, MOIL are gaining anywhere between 5.5% to 8.5% in today's trading session, and this is on the back of an important update that has come in. Cabinet yesterday approved royalty rates for 3 essential minerals: lithium, niobium and rare earth elements. For these, royalty rates have been approved at 3% for lithium and niobium and 1% for rare earth elements. This is an important update that has come in because this paves the way for private commercial mining in India. These companies can now bid for auctions of mining of these minerals, and hence it paves the way for commercial mining in India, and hence beneficial for all of these listed mining companies, the likes of GMDC, NMDC as well. Indigenous mining is important because as of now we are fully dependent on imports for many crucial minerals, the likes of lithium. Remember, lithium is an important raw material for electric vehicle batteries, and to push electric vehicle plants for the country, commercial mining of many of these minerals is important. So on the back of this important update has come in, which is a positive for these companies. All of these counters are gaining in trade today.
Oh yes, they sure are, and that's perhaps the reason why. Asesha, thanks for highlighting that. We'll take a very quick break. We're still looking pretty quiet on the index. Let's see how the next lap of trading pans out. Back with closing trades right here in India now, still in consolidation mode right now for the index, but it's the rise of the luxury hotels in the country that one is seeing. In fact, recently Taj and the Godrej Group together launched a chain of new properties called Taj The Trees, which brings together India's two iconic and most trusted business houses of legacy to create a distinct hotel experience. In fact, Postcard Hotels as well has been on an expansion spree in the country, and it's planning to launch the country's most expensive hotel in Ranthambore. We caught up with both the hotel giants. Let's get a slice of that interaction.
Shamiana is maybe a lot about the legacy. Also, our hotel is a bit about legacy. It's the Godrej Group as well as the Tata's IDBC coming together and coming up with this hotel. We basically in Shamiana would have world melting into one particular pot. What that would mean is a world traveler, when he comes and dines in Shamiana, also gets something which he would get across the world, also gets a flavor of Mumbai. And we have people coming from different age groups, different purposes to Shamiana, and it's a place which will cater to each and everyone.
There are actually two places in the world. Of course, you can go to Australia to watch wildlife, but significantly, Africa and India are two great places to watch wildlife. And the question that we had in our mind was, if everybody comes from all over the world to watch tigers, why don't we have the world's best hotel in the wildlife space in one of the tiger reserves?
Right.
And the answer to that was really Ranthambore. And then the question was, what does it take to build the best hotel in the world? That was the second question. We said a great architect, a great site, a great brand.
Right.
So, and that is one of the reasons we kind of reached out to one of the foremost architects in the world in this space. And we had a great partner, and we also thought that we could launch the postcard ethos into this new destination. We are also doing a hotel in the Upper Himalayas. We haven't shared the destination yet, but we are looking at opening on the 1st of June. So it's like a secret hideaway destination.
Would you like to share that with us right now?
So all I can say is it's going to be in the extreme north part of the region. Okay. All I can say is that if you have to go to a hotel there, you will at least have to acclimatize for a day, because it's up there. It's really, really up there. There are 8 openings next year, and this doesn't include the postcard in the Durham Tea Estate. Means we haven't done a luxury tea estate hotel. So in 1400 acres of the Durham Tea Estate, which is just 20 minutes from the Tezpur airport, you will you'll be actually staying in the tea gardens. You will actually pluck your own tea, and by next day evening, your tea will be packed for you. And then you can get the tea every month sent to your home.
Okay, yes, the rise of hospitality and the luxury hospitality at that. Sandeep, are you buying the arguments that the managements were making and looking at buying some of the hospitality names?
So I think among the hospitality names directly, so there are few players we can play in India. So both of them we own. So I think Taj at the upper end, like Indian Hotels, and Lemon Tree at the middle and business travel end. So we are holding in both of them. I think next 3-4 years at least look very good for them. And depending on how the demand supply pans out, maybe beyond that also.
Sandeep, what about Mahindra Holidays? You had it once upon a time, exited?
Yeah, because Mahindra Holidays, unfortunately, is not a customer-centric company. Most customer reviews tend to be negative. People don't get bookings, etc. So I think company which is not customer-focused, I think long-term they won't do as well. And timeshare as a concept was a great one at a time when Airbnb and these kind of holiday home kind of outlet systems were not there. And I think it's a concept which is sort of behind the time. I would say that it's a concept which is no longer relevant.
No No longer relevant, but I think there is a bit of a speeding up in a couple of these two-wheeler names. TVS Motors, of course, is sitting at life-high level. Yesterday, remember, there was a DAM capital note wherein they had substantially hiked the target price all the way to 3,050 thereabouts and maintained the buy stance because they said that the structural export story remains intact and is likely to gain traction in the second half of the year. And on back of that, they were expecting a double-digit volume growth of over 30% in the second half of the year. Yesterday, there was also a note that came in on Hero MotoCorp from CLSA wherein they had double upgraded that stock. So a lot of these names are seeing action, and of course, if exports do pick up, Bajaj Auto is also one of the names because they had been suffering on account of the slower export pickup. Anything you like, Sandeep, from the two-wheeler basket?
Yes, I think Bajaj Auto has been doing well. In fact, the management also indicated when they did the buyback. So I think there are companies there are some companies when they do the buyback, then you take it seriously, and that sort of indicates they believe that the stock might be undervalued, unlike the IT company which do it more for tax efficiency purposes. So I think that was a good opportunity to come into Bajaj Auto. Overall outlook looks fine for the company. TVS lately I haven't looked at, so I'm not sure what is going to drive a 30% kind of volume growth. I'm not really aware of that, but if that's the thing which is going to happen, then maybe the stock could do one well from here where it is.
Okay, just looking at some of the other movers as well in trade, and just want to check in on what the likes of some of the cement plays are doing. Interestingly, cement, of course, has been seeing a lot of buoyancy. Yesterday as well, you had the likes of an Ultratech, Ramco Cement, all perk up very nicely. And Citi has come out with a note saying that cement prices have been hiked in the southern parts of the country by a good 10%. Small increases seen in north as well as east, saying that the southern prices were not hiked all through the month of September, and all other regions did witness an increase. They're saying that industry sources are indicating weak volume trends in the east market, but going by this precedent, it remains to be seen if the hikes in quantum in south and east sustain, and implications for volumes as well. The other one, of course, is UBL, which is in focus as well. Nuvama has initiated a buy with a target price of 1935 on this one. They're also pretty bullish on not just the consumption patterns, but also the appointment of the new MD and CEO as well. Sandeep, I don't know how closely you're tracking the Elco-Bev industry, because both UBL, you had some very strong quarterly numbers come in from Sula as well. Just wanted to understand where you see this particular space headed.
So I've been tracking the sector, but not really buying into it so much because volume trends have been erratic and cost pressures have been significant in the past, and there are very few players. So UBL I haven't tracked so much lately, but United Space, Diageo, and Sula also I've been tracking. But then purely on valuations, they don't look so attractive relative to what the earnings growth is at this point of time.
Pretty bullish on both Radico as well as UBL, right?
Yeah, and I've also added one more stock, that's Som Distilleries. That's also another stock. I think closer to 220, 225 is where we spotted the breakout for the stock. Now, I think the recent high for the stock was on 375, 380 plus mark. So that's also another chart which looks attractive. And specifically for United Spirits, the stock completed a major breakout. I think it was a triangular pattern breakout, a flag pattern breakout for United Spirits at 900, 990 mark, and that was a range or a resistance where the stock took months to try and cross over those levels. So that's why I believe that possibly the breakout for United Spirits may not be a short-lived, but it could be a bigger breakout. And yes, the entire sector has started to look very attractive. Radico is something which also I think has bounced back from the previous swing lows. I think 50 DMA was the support for Radico, closer to 1100, 1120 odd marks. Stock has recovered more than 10%. So there are a lot many attractive names, but out of the entire pack, the two stocks, United Spirits, Radico, as well as Som Distilleries, is something which I'm bullish on.
Okay, so those were the top recommendations from the Alco-Bev industry. But just wanted to address the news flow that we were tracking on IDB Bank. Seems like that the central bank, that is RBI, is looking to to accelerate the vetting process, and that is likely to happen by October end itself. Do remember that the likes of Kotak Mahindra Bank, CSB Bank, as well as a couple of others had put in their bids to get the majority stake in IDBI, which is currently held by, of course, the government as well as LIC, and it is something that is likely to be resolved soon. So we are tracking that. But since we are talking financials, Sandeep, which are the financials that you own right now or looking at positively?
I think among the larger banks, we only own ICICI Bank at this stage, and also Axis. So I think on both of these, I'm positive, and I believe that they're strategically they are well placed. Valuations are also reasonable. Although ICICI valuation ran up, but then it's consolidated for a long time now, and now it looks much better placed. PSU banks, I don't buy normally. Among the NBFCs, we do own Mahindra Financial. So the stock did well. Then there was this erratic quarter which led to a sell-off. So I think that's something we need to track how their performance pans out over the next 2-3 quarters.
ICICI Bank and Axis that you own, are you looking at adding positions at all, given the consolidation that even you are alluding to? Is it a good time to maybe add average?
Could be, but I think among the sectors where I would say it would be a preference to add would be maybe some, in the large cap side, maybe some auto stocks, or look more on the capital goods stocks and corrections, and then the financials.
Right. Okay, Sandeep, great to have you on the show as always. Glad that you took time out. Let's just revisit what the market is at. Actually, nothing. So it's pretty much a no-go for the index. Hasn't moved at all. 2 points lower if you really want to count that. NMDC, Nalco, Bosch, Gale, Metropolis, all on the gaining spree. But IT is clearly not, along with Apollo Hospitals. We'll take a very quick break. When we come back, the last lap of today's trade.
Welcome back. Well, the global markets are doing all right. The European markets are up 0.5 to 1%, and the Dow futures for now are suggesting an uptick of 100 points. But it's only the IT index which is actually weighing heavy for our own markets. Look at the Tech Mahindra, that's down by over 3%. Infosys is trading at the lowest point of the trading session ahead of its earnings as well. And to add to that, even HCL Tech is quite muted in the trading session, going very weak into the earnings. Let me quickly run you through as to what the expectations are. For Infosys, of course, the big question is what happens to their guidance of 1 to 3.5%. Is there any narrowing of that band? Because overall for Infosys, we are expecting a 1% kind of growth in constant currency, dollar terms as well as rupee term. The margins might expand by 20 basis points, so that the number comes in closer to around 21%, and that's because the company has delayed and deferred the wage hikes. The deal wins is going to be strong this time because they've announced quite a few deals, including Liberty Global, etc. So no problems as far as deal wins is concerned. It's only the question of guidance plus what the management commentary is, plus the attrition that has happened at top. How are they looking at backfilling that? For HCL Tech, again, of course, the guidance will be important because they're talking about 6 to 8% growth on the top line with a margin profile of 18 to 19%. How do they really plan to achieve that? Because over the last couple of quarters, we have seen a bit of a decline come in for HCL Tech in constant currency. This time, we're expecting a pickup, plus a pickup in terms of margin to the tune of 60 basis points. Again, the company has deferred the wage hikes, and that's why you're not seeing an impact come in on Q2. HCL Tech had made actually an acquisition as well, and that's expected to support the top line. Apart from the services business, which has been doing okay, it's PNP and ER&D which has been volatile, so that really would play on mind. But do remember that the expectation is really wide on the screen. There's an analyst expecting 0.4% kind of growth, and it goes all the way to 3.2%. So let's see which end of that range the company delivers its numbers, because for TCS, it was towards the lowest end of any expectation, with that revenue decline happening for the first time since Q1 FY21, which was, of course, the COVID quarter. Sudeep Bandopadhyay is also with us on the show. So, Sudeep, let's begin by discussing the IT space itself. What's the read-through from TCS, and what should one do with their IT positions?
Well, I think, Anisha, I'll maintain my view, which I've been maintaining for quite some time. I think, a couple of more quarters will see pain in the IT stocks, particularly the frontline IT stocks. And we have to treat every IT company differently. They have different set of clients. They have different set of specializations. So we have to focus on that. But overall, I think the message from TCS management interaction, I think, is very loud and clear. The managements are not confident about the future. I think that's one message I at least derived after listening to the TCS management. They are not confident about the next few quarters. Of course, I mean, long term and all that, they're positive, but next few quarters, they're uncertain. So under the circumstances, I think it is better to wait and watch rather than jump into large cap IT. Of course, we'll have to listen to what Infosys and HCL Tech, and by end of today, I think we will know which direction generally the IT companies are moving as of now. But again, I'll highlight that there are companies, small companies and mid-cap companies in IT sector which are focused on specific segments of industry. Let's say travel and tourism, and I have mentioned this earlier. Companies catering to travel and tourism, there is a boom there. And because of that, those IT companies will do well. Look at a company like RateGain Technologies. They've been doing phenomenally well and will continue to do well. Look at Coforge. They will continue to do well. Look at companies which are catering to automobile industry. Now, there is a kind of a major activity going on, transition from IC to EV. And that transition is being facilitated by a lot of IT companies. So a persistent system, is in a different space altogether. So we should look at these IT companies at this stage, not the generic IT companies, because they have challenges in US and particularly North America and Europe.
Okay, that's the take coming in on which way IT may be actually headed as a part. In fact, let me also take it across to Sharad and find out what the dealing room chatter too is this afternoon. Sharad?
Well, yes, in focus we are having Nippon India AMC, and what we are hearing from the dealers is buying has been seen in certain categories in the HNI segment. Now, if you look at the volumes also, that's coming in at 18 times its 20-day average. And importantly, the stock has also hit its 2-year high levels. Now, do remember the Q2 numbers is slated to come on October the 30th, but it's expected that the revenue is expected to increase by more than 5% on a year-on-year basis, and this is coming in because of the increased flows coming in the equity segment and also a stable equity market performance. And of course, we did see the strong mutual fund numbers also coming yesterday. Now, importantly, also the margins are also expected to go up because of the cost-cutting measures which are coming in the company itself. And today in the morning itself, in the afternoon, the HDFC AMC's results also did come in the market hours, and over there also there was a very strong operational jump in the numbers as well.
But stay on. We understand that Zerodha is now facing a growing challenge as rival platform Grow has managed to surpass the company in terms of monthly active users and dethroned it as the top entity with the highest amount of users. With the competition heating up in this space, so let's try and analyze what the numbers are throwing up. Sharad, tell us your perspective.
Well, yes, it's very interesting development coming in, and for the first time, Grow has actually displaced Zerodha when it comes to become the top broker in the country. Now, they have displaced it under the active user segment, and importantly, the new entrants have been coming in such as Paytm Money, Dhan, and even HDFC Sky, and because of that, the competition has also been heated up in the broking space. Now, the discount brokers are currently having 62% market share, and if you leave the traditional brokers on the other side, they're just having a mere 23%. Now, let's look at how the numbers have shaped up. If we compare Grow and Zerodha over here, Grow had roughly 66 lakh active users, and Zerodha, if you look at the numbers, that is 65 lakh. This is coming in for the month of September. While in the August, the numbers were reversed. For Grow, it was roughly 62 lakh active users, while for Zerodha, it was at a higher side of 63 lakh. Now, on a month-on-month basis, if you look at the growth amongst the discount brokers, Grow takes the cake, almost 6% growth. Of course, a good growth coming in from Angel One as well, which is listed. And if you look at the bank-backed brokers over here, we see SBI Cap having a 7% growth, while in the listed space, ICICI Securities has shown a degrowth coming in of almost 2%. Lastly, I'd like to point out the stocks which are there in the traditional segment, and Motilal Oswal has given a positive return, while on the other side, IIFL Securities has also shown a 2% degrowth on a month-on-month basis.
Okay, Sharad, thanks so much for putting that into perspective. Just wanted to address the flashes for you on the screen, wherein it seems that government is seeking bid for 7 geographical locations for the city gas distribution. IGL was actually doing quite well in the trading session. It was up around 3% the last time I checked, 4% higher now. And let's pull up Mahanagar Gas as well as to is there a move there. And separately, of course, Gujarat Gas as well, because these are the 3 listed players we have. Adani Total too has some amount of exposure in terms of gas distribution. So let's see if any of these companies are reacting, but not by a whole lot. It's pretty much flat. Let's take the time now to address the price volume buzzers as well, because a lot of stocks were reacting on heavy volumes as well. Interglobe Aviation, for instance, has hit that 2-month high on an intraday basis. It's been advancing for 3rd consecutive week. Of course, we got you the exclusive story as well, how Go First is getting some bids from perhaps the Jindal Group, Jindal Power, for instance. So let's see what happens. But the sector dynamics are shaping up very, very quickly. Nalco is the other one, wherein the breakout has happened from a double bottom chart pattern. It's formed a bullish belt hold candlestick pattern, and the volume is 4 times the usual average. And then lastly, GAIL, that's also seeing a breakout from the descending triangle chart pattern, volume almost 3x, and the stock is forming a higher low for the 5th consecutive month. Nuresh, your view on some of these buzzers, Indigo, Nalco, GAIL, and at BPCL as well, because there's one of the brokerage notes there today.
So I would like to talk on Indigo as well as GAIL. Those are the names which I've been recommending for a few sessions. Now, if you look at Indigo, the only concern for the stock has been the selling by the previous promoter, and that's the reason the stock has not rallied really fast. It's been a slow and steady move. We saw a block happen roughly a couple of months back around this 2450, 2500 mark only. We've crossed almost a 2-month high, about 2600. Ideally, slowly and steadily, the stock should head up towards 2750 to 2900. Any dips back to 2450, 2500 remains a buying zone. So positive on the stock, have a target price of 2750, would be slow and steady. Same way, GAIL India looks very promising because the stock has finally, for the last 2 weeks, was in a very, very tight range at 120 to 125, finally broken out, hitting a new 52-week high, almost there, about to hit a new 52-week high. On a dividend adjusted, it would be a new multi-year high and an all-time high also. So the stock looks promising for a move towards 135 to 145 levels in the short term.
Right, okay. That's the take coming in on GAIL. And since we're on the subject of some of the buzzers, BPCL and that brokerage upgrade coming in on BPCL, let me take it across to Somit and find out more about that note.
Well, it's not only BPCL but the entire oil marketing pack, that is BPCL, HPCL and Indian Oil Corporation, that is buzzing in trade. Now what CT is saying in its note is the fact that crude prices have come off from the recent high, and along with that gasoline and diesel cracks have also cooled off, thereby sharply improving the spot integrated margin for oil marketing companies. Now despite this improvement, oil marketing companies have been underperforming the market, and hence they are bullish on the entire pack. Now they are more bullish on BPCL because the return potential based on that target price is the highest on BPCL. They have a target price of 445, which suggests a return potential of close to 40-odd%. Hence, they're more bullish on BPCL as compared to HPCL and Indian Oil Corporation as well. Now, along with this, the broker is also saying that they're seeing 2 short-term catalysts. Firstly, is the second quarter earnings, which could also give the street more belief that there could be a healthy interim dividend that the company could announce going forward. They're expecting some dividend announcement to come in Jan and Feb 2024, which could be positive for shareholders. Along with this, they're also saying that the concerns on fuel price cut could also ease down going forward, given the fact that election dates are now announced. On the Q2 earnings, they are saying that HPCL and BPCL earnings could be lower on a sequential basis, but it could also surprise given the fact that there could be some higher inventory gains on the books of these companies going forward. Now for HPCL, the target price is around 320, which suggests a return potential of more than 35%, and on Indian Oil Corporation, they have a hold rating with a target price of around 88 rupees, which suggests a return potential of around 5-odd% by Citi.
Okay, Somit, thanks so much for that. But since we're talking about brokerage notes, there was a very bullish note this morning on Zomato from ICICI Securities, and they are expecting a 50% upside, and that's after the fact that stock has doubled this year already. Sandeep, coming on this one, Sudeep, I beg your pardon, coming on this one, Zomato, could it really rally 50% from here?
Well, I don't subscribe to that view, and I'll be cautious. As you rightly said, it has already moved up quite a bit. There are some headwinds, and I understand that the competitor is undergoing some challenges in Mumbai city in particular, with staff under some kind of a strike. So there are headwinds. Of course, the festive season and ongoing World Cup provides an incremental opportunity for Zomato and competitors as far as their food delivery business is concerned. But having said that, I think as far as the share price is concerned, 50% upside from current levels looks a bit stretched, and I would advise a bit of caution here, definitely.
Okay, a lot of important data points, not just earnings, but you've also got the CPI print, which is slated for today. So let me take it across to Harsh, find out what to expect from this data.
Well, yes, absolutely. So as correctly said by you, 5.5% is the CPI expectation. That's the print expected in September as per our poll. What this essentially indicates is CPI is coming off. When I'm looking at trends with regard to July and August, CPI was quite elevated, 7.4% in July, 6.8% in August. But mind you, both July and August were off a lower base, and September offers or gives that comfort of a slightly higher base. So let me also take you through the September print. As of 2022 September, the CPI print came in at 7.4%, which was quite elevated, versus the August print, which was at 7% in 2022. So when you're looking at that spike, you're seeing that also aiding the CPI print this time around. But definitely this will bring some amount of relief and comfort with regard to where the RBI is, because it will bring the CPI below that 6% tolerance, upper tolerance band that the RBI has. What will really aid the slightly lower CPI print is, of course, food inflation. The RBI did mention that food inflation is starting to come off, and hopefully in October will come off even more steeply. That's the expectation. Of course, directionally we'll get that viewpoint as to whether it is coming off. CPI for the food inflation for the month of August was at 10%. So that print coming out in September will be a key number that one will watch out for. Also, the RBI's expectation overall for Q2 is 6.4%. So we'll have to wait and watch whether that gets met as well. WPI has also declined, so that's a positive, especially for the month of August. So we're seeing those declining trends play out in the economy anyway. So that's a positive here.
Okay, thanks so much, Harsh, for that. But let's just talk about which are the cues lined up for tomorrow. Of course, the CPI data and IIP data will come later today. And then US CPI is also due to, so that will be a more important cue, to be honest, than the Indian CPI, because Indian CPI has cooled off, but the US one hasn't. And that will decide whether in November we are in for another rate hike from the US Fed or not. So that's important to track. Of course, tomorrow then, the WPI data will be out, as well as the trade data. So we'll watch out for that. We also have earnings from HDFC Standard Life Insurance, Tata Steel, Sai Silk will come out with its Q1 numbers, Som Distilleries, as well as Gen Network. So these are some of the stocks that you need to keep on your radar tomorrow. And then, of course, it's National Cinema Day tomorrow. Movie tickets are going to cost 99 rupees. We have a movie buff in-house in terms of Kunal. So Kunal, you're going for the movies tomorrow, 99 rupees per ticket?
I wouldn't mind, but I'm not sure.
You've not seen Jawan.
So I'm sure somewhere in the city it would be listed. Going for Jawan. You want Pathan, now comes Jawan. I don't know which the
No, I think I've already seen Jawan, the second one, whichever is released.
Whichever
and the first one I've not seen it. So maybe I'll watch the first one.
Let's see whether that first one is listed or not somewhere, because I mean it's been a while that we saw Pathan as far as the theatres is concerned, but there'll be a lot of other movies that you can go and watch. It's coming at a subsidized rate of just 99 rupees, so not a bad bet coming in. But we talked about earnings which are due tomorrow, and one such earnings is HDFC Life. Let's go across to Harsh to get the expectations right.
Well, yes, HDFC Life all set to declare numbers. We're expecting an AP growth to be healthy at 8%. You're also seeing value of new business growth also to be around that 8% mark. That's the expectation. Slightly higher base, and also it's been a tepid quarter. Also, when overall we're looking at VNB margins, they're set to expand from that 25.8% mark to 26.5%. So that's the one key positive. Keep looking out for those VNB margins, because this is a combined book now of HDFC Life plus Exide Life, and therefore those VNB margins should start inching higher as per management commentary. So that's one thing that we'll have our eyes out on. The second piece, of course, will be quite key, will be with regard to how the growth is shaping up going forward. What's the expectation? That's one piece. The other one is also going to be with regard to how you're looking at non-par growth and also how annuity is expected to grow going forward. So both of those will hold crucial pieces because they will impact VNB margins together, and that will obviously impact profitability going forward. You're expecting around a 20% bump up in AUM, so expecting a healthy set overall from HDFC Life.
Okay, that's the take coming in on HDFC Life and what to expect there. But Sudeep, I guess, given the elevated levels still in the market, the scope for disappointment is higher, right? Wherever, the earnings will not match up to expectations. Just wanted to understand as a color, considering today we officially kickstarted the earnings, or yesterday rather, with TCS. Where do you think there's scope for big disappointment and a big surprise, if at all?
Well, the surprise or the good bunch of results should come from the BFSI pack. I think there has been a confluence of positive factors as far as BFSI is concerned, and that continues. So I would be probably happy to see the numbers coming out of the BFSI pack. I believe that the specialty chemicals pack will be the ones where we will see negative surprises. The pain in the specialty chemical industry isn't yet over. Probably it will continue for a few more quarters. And this used to be a market darling sector, but unfortunately the performance hasn't been. And the factors again here are still negative. So the challenges in China, the competition coming from Chinese producers, and the low demand of the output in Europe and US is plaguing these companies. So this is where we will see, by and large, other sectors, including cement, will be as per expectations. That's what I believe.
So much for putting that into perspective as to where the disappointment and surprise could be in the quarter, which is just, of course, underway now, the earnings, that is. Naresh, let's start with the BTS Ideas. What do you have for us?
So continuing to look at GAIL India and Jubilant Food. So first is the buy on Jubilant Food Works. Breakout on hourly charts, waiting for a much bigger breakout above 550. Stop loss at 541, target price of 560. Second is a buy on GAIL India. Fresh breakout, done good volumes and price action today. Stop loss at 126.50, target price of 133.
Right, okay. Those are some of the buzzing stocks in trade. Of course, NMDC, Nalco, those are the two stocks which are seeing some immense amount of strength. And autos as well have made a decent comeback today. So Maruti once again is propping up in trade. Bajaj Auto also is looking quite strong. And I think Eicher is the other gainer in trade, along with M&M, which is also seeing strength of about 0.6%. Naresh, let's revisit what you like within autos.
So in terms of auto, the stock which I'm closely watching out right now for is Tata Motors, which has consolidated well around the 600 to 645 band. If it can cross about 645, that would be an interesting breakout in the short term. So that's the one which is top on the radar. The next one is looking at Ashok Leyland at 165, 170 as a good entry point for a medium-term outlook. And then finally, it is Hero MotoCorp if it can sustain above that 3100, 3150 mark. But as of now, top on the radar is Tata Motors.
That's the view on the two-wheeler space. Kunal, your BTSC recommendations?
So I'll go with two buy calls. Cyient DLM is something which I would recommend at current levels, trading at 690 approximately, forming a bullish pennant formation. And in fact, the stock is at a lower end of this support zone. So the risk reward is attractive. Retesting the previous highs, what I'm expecting for the stock, 740 as target, stop loss at 667. And the second will be Ban GAIL, classical breakout today for the stock, nearing towards its life high, breakout above 129.5 mark. I believe the stock should be good for another 7 to 8 points on the upside at least. 135 as a target, stop loss 122.5.
Actually, a lot of these stock market facing stocks are actually doing well. We talked about Nippon Life AMC, how that's high by 8 to 9%, and Sharad was pointing out how it's featuring in the list in the dealing rooms as well. You also have Motilal Oswal, which is up a good 8%. CAMS is higher by 7%, and we should also pull up what's happening to CDSL because that stock too is higher by 4.5%. So the time and again we have been hearing about the increase in the demat account or the SIP crossing 16,000, but if you look at the overall penetration level of the people having exposure to stock market is still quite low. To play this theme of entire financialization, which names come to mind? Add to that a K Fintech, Angel One and rest of the names as well. Any top recommendations?
Well, I think some of the market infrastructure companies should be looked at definitely. I think these are fundamental to running the markets, and they are also showing a lot of improved profitability and growth. So you're talking about CDSL. I think it's a good bet, but it's now probably at an elevated level. So I don't think I will recommend CDSL. One can definitely look at MCX. The transition to the new platform, which is happening, I think next week, should take them to a different level. Also, the new launch of new products and services should help MCX. It has suffered in the past, and now I think its time has come. And I think MCX can definitely be looked at. As far as the the direct service providers like an Angel One and other listed players, they are good companies. They're doing well, but the fact remains that they've already moved up quite a bit, and at current levels, I think getting into these stocks may not be recommended.
Right. Okay, let's begin winding up then for the day. Of course, we're closing in just absolutely flat, 19,789. But Naresh, before we, call it over on the show,